Pakistan's economy slowed in 2019 and contracted in 2020, as did for most other countries due to global pandemic. Though growth resumed in 2021, it nearly got paralyzed with mounting debt burden and political instability in 2022. When Imran Khan became Prime Minister in 2018, he promised jobs, new housing and economic reforms. But tensions between India and Pakistan remained high. Political and social instability hinder economic development. Textiles and apparel account for most export earnings of Pakistan, but much of its economy is informal, and underemployment remains high. China pledged more than $60 billion in infrastructure and energy investments in China-Pakistan economic corridor projects, but it suffered significant setbacks and has drawn criticism. Pakistan's exchange reserves have declined by $6.7 billion, and its biggest ally, China, started to reduce its investment in the country. Pakistan today struggles to quell default fears in domestic and international markets. With a $1.1 billion IMF bailout tranche stuck due to differences, which otherwise should have been completed last November, it's staring at a possible bankruptcy. The food crisis has also deepened in the country. Food inflation quickened 35.5% year-on-year, while transport prices rose 41.2% in December 2022. Such is the extent of the crisis that the government auctioned a Pakistani embassy property in the US a few days ago. The 2022 monsoon flood increased Pakistan's dependence on imported goods other than oil, while the country's exports slumped. According to the Pakistan Bureau of Statistics, the country's trade deficit stood at over $2.8 billion in December 2022, as exports declined by over 16% to $2.3 billion. A depreciating currency isn't helping the economic situation either. Pakistani rupee fell by nearly 30% in 2022, compared to the US dollar. A Reuters report stated that Pakistan has to meet external financing needs to the tune of over $30 billion up until June 2023, including energy and debt repayments. By all counts, that's an impossible feat considering the country's sluggish GDP growth. The World Bank has pegged it at just 2%. Pakistan is also facing skyrocketing inflation that could rise up to 23% in the current financial year. Slower growth and rising inflation could prove to be a dangerous combination for the nation, as getting a job would be harder and harder for its population. The World Bank, in its annual debt report published recently, estimated that Pakistan's total external debt was at $130.433 billion by 2021. The country has to pay $33 billion debts by 2023. Steve Hank, professor of applied economics at Johns Hopkins University, in a tweet on 14th October last year said, Pakistan was on the brink of a debt default. Its sovereign bonds, he said, lost more than 60% of their value in 2022. China is Pakistan's largest bilateral creditor, with outstanding loans of $14.5 billion. Only the Asian Development Bank at $14 billion and the World Bank at $18.1 billion have comparable amounts owed to them. Pakistan also owes $8.77 billion to commercial banks, which includes banks from West Asia and 3 Chinese lenders: the Bank of China, ICBC, and China Development Bank. All 3 of them are state-owned banks. Between 2016-17 to 2020-21, the 3 Chinese lenders extended short-term loans worth $11.48 billion. It is not clear how much of this amount is still outstanding. Pakistan pays a higher rate of interest to China and its banks compared to ADB and World Bank. While the loans from the latter to international financial organizations are for 25 to 30 years and have been made at much lower rates, Chinese commercial banks are for shorter tenures of 1 to 3 years and at higher interest rates. This difference also extends to bilateral lending. Compared to other bilateral lenders, China's loan tenures are shorter and interest rates higher. Bilateral loans from Germany, Japan and France charge interest of under 1%, while for the same loans, China charges interest rates at 3 to 3.5%. Pakistan's economic crisis can be simply told as a compound fallout of mounting debt, inflated energy import costs, dwindling forex reserves, global inflation, political instability, and a sustained drop in GDP growth. For the Shehbaz Sharif government, it is now a race against time to prevent the nation from a complete economic collapse. Else, nearly 230 million Pakistani could severely suffer for generations to come.
If you like the video, do like, comment, share and subscribe.